Okay, today we're going to get into the skills acquisition, and this is really now starting to get to where the rubber meets the road in transferring a little bit about what you know so far, and you get still a lot more knowledge to get you, and that knowledge to start assimilating it into our minds. And I'm going to start off by preparing for this trading exercise. So to be able to do the trading exercise, we need to have a plan to follow, to do the actual exercise, step-by-step plan. So I'm going to do some preparation for that for you today to really get you to understand how important this stuff is and how important it is for you to go through this process, this learning process and skills acquisition process. And then we'll get into the skills acquisition plan. And as always, there's going to be some homework and some reading. And specifically, the first reading exercise that I'm going to give you is just 3 pages, or even not even that, 2.5 pages. And I'm going to want you to read that multiple times. Very important. Before we do that, let's just take stock of where we are in our journey. And I'm going to do that with a quote from Mark Douglas in chapter 3 of the book. Yeah, I'm jumping around and I'm trying to bring you Mark's, I know he's got it in a sequential order, but I'm trying to bring in different bits of information, different bits of important information, and highlight the really important stuff, changing the order up a bit and bring it to you in a sequence that we can actually hopefully better assimilate this and take the experience that we have in our lives to date and go to a different level. So I'm going to give you the definition of Mark's definition of a positive winning attitude, just to give you an idea, and you can kind of put yourself into where you might think you are relative to what the definition is. So you can set up a kind of mental conditions that are most conducive to experiencing the zone, what the book is all about, by developing a positive winning attitude. I define a positive winning attitude as expecting a positive result. That's having a positive expectation, an expected value, which we covered in the last session, from your efforts, with an acceptance that whatever results you get are a perfect reflection of your level of development and what you need to do to learn to do better. So it's about wherever we are, there's always a new level to go to. We can always get better because nobody is the best and achieves the best and stays at the best. But today's session is going to challenge you to see where you really are and where you are in your level of development. And that's what the great traders have, a winning attitude that allows them to easily move beyond their mistakes and keep going. Others get bogged down in negative self-criticism, regret, and self-pity. Not many people ever develop a positive winning attitude. Why is that? Because especially in the market, we get bombarded with so much negative feedback. And we really have to cut through that, not only in the noise we get, but also in the price action that comes from the market. And we've covered this already, and how we perceive that, which we'll talk a bit more about in the next session, really has a massive impact on what goes on in our minds. So this positive winning attitude is one that we want to have all the time. So how do we get to there? So the objectives of this trading exercise that I'm going to talk about today is to energize new beliefs or habits with respect to trading the market, and they may overlap into other parts of your life. De-energize existing dysfunctional habits and beliefs with respect to trading, and to create new ways to think with respect to trading the market, and be at peace in every step with your new trading habits. So effectively what we're going to be developing a new trading habits, and I'm just going to now position this whole thing about habits and beliefs so it's absolutely clear to you how important they are and what they are, what the differences are, and why you need to do this. And to do that, I'm going to go back to James Clear's his work, Atomic Habits, and a lot of it is based on, as I've said before, not only his personal experience, but him backing it up with research being done by scientists, basically. And he talks about the 3 layers of behavior change to get to new habits, and how do we get to those new habits. And I've already gone through this, that the 3 layers, at the center is identity, the next layer is process, and the last layer is outcomes. He's spoken about being process orientated, not outcome orientated. And now we're going to go, and we covered process in session 2. Now we're going to go to the middle, to the lower level, to where identity is. And the third and deepest layer is changing your identity. And he's already covered, and prior to this, page 30 in the book, the Kindle version, he's already covered the other 2 layers, outcomes and processes. And now this level is concerned with changing your beliefs, which is why we're going to do this trading exercise. Now, a lot of you will be sitting here immediately going, that's going to be messing with who I am. It's messing with my identity. Immediately your current identity, your current beliefs might, from the experience I've had working with people, is it probably will will start defending itself right now when you hear those words. Don't mess with my identity. But as you'll see, this is something that is not that difficult to do, and it's something that a lot of people do all the time, but you just don't realize you're doing it. Your worldview, your self-image, your judgments about yourself and others. So this is the level where your beliefs are. Most of the beliefs, assumptions, and biases you hold are associated with this level. And you may have heard of heuristics and biases from behavioral finance, and Tversky, Kahneman, and a bunch of others did a lot of work in this environment. And when you hear people talk about behavioral finance, this is what they're talking about. They're talking about beliefs, assumptions, and biases that we hold at this identity level with respect to investing. So this is the area that we're going to get into. Outcomes are about what you get, processes are about what you do, and identity is about what you believe, which I covered in a previous session. So now we're getting into the middle, the identity, the beliefs, what you believe with respect to trading. Most people don't even consider identity change when they set out to improve. They just think, I want to be skinny, and if I stick to this diet, then I'll be skinny. That's the process, the outcome in the process. They set goals and determine the actions they should take to achieve those goals without considering the beliefs that drive their actions. They never shift the way they look at themselves, and they don't realize that their old identity can sabotage their new plans for change. So when you go into any new environment, even if, when I'm saying new, it might not be the first day, week, or months, it could be even years, you could still be new to trading, to active investing. If you think back to the ladder we went through, the consciously competent ladder that we went through in session 1, people can spend years in levels 1 and 2. Why? Because their old identity or their current identity is blocking them jumping above that line, getting to be consciously competent and unconsciously competent, which is what we want to aim at. And that's really what all this is about, what these sessions are about, and the specific steps and tasks and things that we are going to take you through in these sessions to get you above the line, to be consciously competent and get there pretty quickly. But if your current beliefs self-sabotage, your old idea, your current identity self-sabotages you, we'll talk a bit about that towards the end of the session, then you've got Buckley's chance of ever getting above the line to being consciously competent. As I'm saying these words, just reflect on what you're thinking as I'm saying, what you're feeling. And the degree to which you're feeling some little bit of frustration, a little bit of anger, is the degree to which your current beliefs are actually defending themselves. So all of us self-sabotage ourselves in everything we do to some degree. What this is also about, and the de-energizing, is to stop the self-sabotaging that happens that we're doing. And sometimes that's very difficult to identify what we are doing to self-sabotage ourselves. But the process I'm going to take you through is you don't actually need to do that because it's very hard to do. What we're going to do is energize a new set of beliefs. And in so doing, the other ones will get automatically, the self-sabotaging beliefs will get automatically de-energized. Your habits shape your identity, and your identity shapes your habits. The focus should always be on becoming that type of person, not getting a particular outcome. And this is going from outcome-focused to process-focused to habit-focused. But we start at the middle. But everybody starts at the end. The more you start at the middle with your beliefs and your habits, but you need a process to do that, the outcomes take care of themselves. They just happen. But the true question is, are you becoming the type of person you want to become? The first step is not what or how, but who, the center, the identity layer. You have the power to change your beliefs about yourself. Your identity is not set in stone. Habits fundamentally are not about having something, they're about becoming someone, about transforming from this set of beliefs, this person, with respect to this particular environment in which you operate, to becoming that person. And that's what we've got to keep on focusing on. We've got to become someone different with respect to trading. Ultimately, your habits matter because they help you become the type of person you wish to be. You are the channel through which you develop your deepest beliefs about yourself. Means you got to do the work. Quite literally, you become your habits. We want to define those habits, and that's what we're going to do. All you got to do is just do these and they'll become habits. So now flipping over to Mark Douglas and what he said, which is all in line with exactly what James Clear said in Atomic Habits. What James Clear said there is backed by scientific experiments, and there's a whole bunch of them at the back of his book of other writers and scientists and researchers that have got to the conclusions that he's put in his book. So now we're going to go to Mark Douglas. To integrate these principles into your mental system at a functional level requires that you purposely create a series of experiences that are consistent with them. Now, these are the things we've covered in the course today. Now we're going to talk about creating the series of experiences that are consistent with who we want to become with respect to trading. The first stage is the mechanical stage. In this stage, you, firstly, build the self-trust necessary to operate in an unlimited environment. Learn to flawlessly execute a trading system. Train your mind to think in probabilities, the 5 fundamental truths, which we covered yesterday, we covered in session 3. Create a strong, unshakable belief in your consistency as a trader. Our objective is for us to believe this, and you should start saying this. There's nothing stopping you. If it feels ridiculous to say it aloud in front of your trading screen or whatever it might be, or your computer, but you need to start saying this. I am a consistently peaceful, active investor in all market conditions. And you can say that under your breath when you're sitting on a tram, going along in your motor car, all the times that you find yourself on your own, or you can say it aloud if you want to, sitting in the tram or in a bus or on the train. But especially when you're on your own, instead of watching TV, go and spend 30 seconds repeating that to yourself a few times. I am a consistently peaceful, active investor in all market conditions. At the micro level, the outcomes to individual edges are independent occurrences and random in relationship to one another. So this is Mark Douglas now. So there's 2 levels you've got to think about, the micro level and the macro level. So the micro level are the individual events that you actually have to do, the buys and sells that you have to do along the way on this journey. At the macro level, the outcomes over a series of trades will produce consistent results. And this is really the law of large numbers over a large sample in an uncertain environment, but where your decision-making criteria have an edge. That's effectively what it comes down to. That series of trades will produce consistent results. Not perfect results, not a probability of 1 results, because it's a probabilistic environment. Any uncertain environment is a probabilistic environment. And so we have to think in terms of probabilities, not at the conscious level, but at the subconscious level. And to do that, we have to break the expectation of any projected outcome into the future being positive. And we learned from session 3 that our minds automatically, the moment that we make a decision and there's something at stake, we want to be right. It's a prediction. It's a reward detector that I went through in session 3. That's something that's just part of who we are as being a human being. Now, that is why trading can be so hard, is that with trading, we have to break that nexus. We have to have a neutral expectation. We have no expectation of anything positive or negative, just that something will happen and there is going to be an outcome and it will end at some stage. And that there's a random distribution of wins and losses for any given set of variables that define an edge. We have to instill those beliefs. And that's the macro level that we have to believe in, which breaks the nexus of being outcome orientated for each individual event. We don't want that. We want to be process orientated for each individual event. And to be able to do that, we have to go a level deeper to the identity level, the belief level. From a probabilities perspective, this means that instead of being the person playing the slot machine as a trader, you can be the casino. So we're going from being the punter to being the house. Why? Because we've got an edge. You have an edge that genuinely puts the odds of success in your favor. The edge does 2 things. Now, this is over a series of individual events over a large sample, and we have an edge. And this is what it means to be thinking in probabilities. And that edge is not only crucial in understanding that over a large sample we're going to be net winners, it's also crucial for keeping us in the flow. And we can only realize the outcomes of the edge if we stay in the flow. And the edge is responsible for giving you indications of when a particular pattern exists and is present in this endless flow of opportunities that is the market, for us to stay in the flow of that environment. Now, there's tons of different edges. It just depends on whether you want to be intraday, day trader, but certainly a long-term trader where you have positions for 2, 3, 4, 5, 10 years, whatever it is. But whatever your edge is, from one extreme to the other, reversion to the mean, trend following, swing trading, day trading, is that you have to totally trust in that edge that is going to keep you in the flow. And the only way you can stay in the flow is to act on your edge, right? So the edge puts the odds in your favor, and you have to trust and believe that for you to become the house. Otherwise, you're going to be a punter. And the more you don't follow that edge, the more you don't stay in the flow, the more you pick and choose and stop and start and all that sort of thing, which are all trading errors, which we'll get into the next session, is taking you out of the flow. And you're not going to realize the edge. You're not going to realize the odds that you have in your favor if you just chop and change and pick and you change your criteria. You're inconsistent. You get random results because you've got random actions, all of those sorts of things. So we have to so we can become the casino if you have an edge that genuinely puts the odds of success in your favor, and you can think about trading in the appropriate manner, the 5 fundamental truths, and you can do everything you need to do over a series of trades. Then, like the casinos, you will own the game and be a consistent winner. So that's what we're trying to achieve in this trading exercise. What is the definition of a casino business? Executor of its edges. That's all it's got to do, is just execute its edges. What is the definition of trading? Quote unquote, executing edges. That's all we got to do, is execute edges, like the casino, but we've got to have an edge, and we've got to trust it and believe in it and have the right mindset to be able to do it. The same mindset as a casino operator. And by the way, I can't find that anywhere in any of Mark's written material, but I've got that off a recording of the Path to Consistency workshop that he did in the United States. It's the second side of tape 4 at the 24-minute mark, and he talks about that's all what trading is, just executing edges. I immediately think anything can happen. Every moment in the market is unique. It disassociates me with the past experience, a negative past experience, and it puts me in the moment. There's a random distribution between wins and losses for any given set of variables that define an edge. So if the conditions look like and the noise sounds like the market's going to go down, I break that nexus by saying there's a random distribution between wins and losses for any given set of variables that define an edge. And that goes, boom, I'm monitoring my susceptibility for making a trading error. And you just keep on going back to these 7 principles, but more importantly, the 5 fundamental truths. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. I understand, not at a conscious level, but at a subconscious level. And the only way you're going to get to understand it at a subconscious level, at the identity level, at the belief level, is by going through a series of experiences that actually energizes these beliefs down at the identity level. But these are the 7 principles of consistency through which you have now got to go and operate the trading exercise. So let's talk about the skills acquisition plan. This plan now is effectively the same as all the investment plans, or the investment plans that we've had for decades. And we've modified it to, as Mark Douglas talks about, step into a process that is a skills acquisition process, not a profitability process. Because like anything, you have to acquire the skills before you can acquire the outcomes. And where do the skills happen? They happen in the mind. They happen at the belief level. So this is where the skills have to be attained. And we're going to go through a process to attain these mindset belief skills so that we can get the outcomes that we want. And I'd say to you that we're only kidding ourselves if we think we're going to get the outcomes without the skills. It just ain't going to happen. And knowing what to do is not good enough. There are lots of derelict professors that are doing nothing with their lives. Why? Because they haven't applied their knowledge. They got all the knowledge, and they're probably very smart and clever people and intellectually way up there, but they haven't gone and taken the next step. Why? Because of the fear, and really getting the skills we're talking about here, the fear of whatever the negatives are that could come out of them applying the knowledge that they have. So they don't ever get to apply it. And that's what we want to do here and get this with this trading exercise. So, mission statement: to continue to actively manage a mechanical investing process using stocks on the ASX, or you can choose the USA if you want, so that the active investor managing the skills acquisition plan, the SAP, managing this portfolio. So we're going to set up a portfolio. So what we're going to do, we're going to instill this belief: I am a consistently peaceful, active investor in all market conditions. You attain a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of the adverse conditions. Page reference. I've used that a lot. So we've set that up. This is really the crux of what we're trying to do here. And it's remain disciplined, focused, and confident in adverse market conditions. That's what we have to get to. And to have no conflicting beliefs, to be totally comfortable, not feel levels of discomfort when your portfolio is sitting at minus 18% drawdown, to just trade through that and just to continue executing your edge. Becomes a consistent winner, unafraid of all market conditions, and a best trader, as per this quote. I don't think I could put the difference between the consistent winners and everyone else more simply than this: the best traders aren't afraid. And that's where we want to get to. We're going to have to overcome fears, and we'll talk about, we haven't spoken much about I have mentioned them, the primary fears, or the primal fears that Mark Douglas talks about. We'll get into that in coming sessions, because overcoming those really is executing this process and keeping going with it, and getting through the conflict and the discomfort of executing the edge in adverse conditions is what really gets you to overcome the 4 primary fears. So you overcome your afraidness, your fear. Executes the mechanical investing process effortlessly with no conflicting thoughts that cause hesitation, reservation, doubt, uncertainty, or fear about doing any buy or sell transaction. So that's the mission we're setting up here. So there's no money in there. It's all skill, mental skill that we are aiming at. And the challenge is for us to continue executing until that happens. And when do we get challenged that maybe the system is broken or it doesn't work? Well, when we're in drawdown and all the negativities come rushing back. And if those negativities and the discomfort and the conflict come rushing back when we're in the middle of drawdown, that's the degree to which you have not yet attained the skills, the mental skills that we're talking about here. So we're going to execute this. So once you have a mechanical edge, then 100% of the problem you've got to solve is to get the mindset skills. And that's what this training is all about. But once you have both, the ongoing from there on, the mechanical investing process, in my view, becomes 10% of the equation. And the mindset, the ongoing developing and maintaining, the keeping of the mindset becomes 90% of the equation. But the more you go through drawdown and come out the other end, the more energy, the more energized this mindset that Mark Douglas coaches and teaches about comes to the fore, and you de-energize all of those fears and reservations and negative thoughts that would typically take you out of the flow, which means you stop executing the process. So in any investment plan, we have the mission statement, then we have the goals and objective statement, then we have the methodology, the method, the how statement. And that can include the actual timing, which is the trade entry and trade exit. It also includes risk management and money management. You can lump those into one section, being section 3, or you can have them separate sections. And then the fourth or the sixth, depending on how you divide your investment plan up, the last section is the process management. So in section 3, the method section, you've got to define trade entry. And this is taken straight out of Trading in the Zone. Trade entry. The variables you use to define your edge have to be absolutely precise. No wiggle room. The system has to be designed so that it does not require you to make any subjective decisions or judgments about whether your edge is present. 100% unambiguous. If the market is aligned in a way that conforms with the rigid variables of your system, then you have a trade. If not, then you don't have a trade. On, off. This is the edge, the casino. This is you executing your edges. Period. Nothing else. No other extraneous or random factors can enter into the equation. No noise, no geopolitical, no reading the newspapers, no chat forums, no nothing. You've got to put all of that aside, and you just got to focus on the no wiggle room trade entry that you have to execute your trades and compile a portfolio to get an equity curve. Stop loss exit. The same conditions apply to getting out of a trade that's not working. All of those no wiggle room definitions of criteria that define when you exit. Your methodology has to tell you exactly how much you need to risk to find out if the trade is going to work. So that's not really stop loss. That is more, or it is a degree of stop loss because that's the individual amount of risk that you can take. But there's also a position sizing in that as well to get into absolute dollars, because certainly a small percent of a big number can be a big absolute number. And it might not be the percent that we have an issue with, it might be the absolute as well. So we're going to talk about that in a moment. So there's a degree of risk management and position sizing in that as well. But a lot of people who have a high intellect think that by knowing they can do. And that is just not true. You can't just get skills instantly by being aware of what the skills should be. So knowledge is becoming aware of and accepting, right? So knowledge is not just reading it and then saying, okay, it's out there, it's a bit of knowledge, it's a fact or something to know. It's also about accepting that knowledge. Because if you don't accept the knowledge, then you're not going to go and do the next step, which is apply. So knowledge is learning. So highly intelligent people can become aware of very quickly and get that into their minds quickly. That's learning quickly. What the mistake that a lot of people make is that they confuse learning with training, with skills acquisition, knowledge with skills acquisition. And skills acquisition is about training and completing exercises. In the physical environment, if you're a golfer, it's about hitting balls and about then executing in the environment. So that's experiencing stuff, doing stuff. Tennis is the other one where you've got to go and hit a ball against a wall, have head-ups, and that's acquiring physical skills. We have to acquire mental skills in the trading environment. And acquiring skills is not a function of intellect. It's a function of repeated exercises, as James Clear said earlier. And it's not a function of time. It's a function of experiences and lots of doing, repeated doing. And that is why we use a mechanical system, because the mechanical system has got to be doing the same stuff. It's a degree of sameness in doing that builds the habits. You can't build a habit of doing different things all the time. You can't build a habit of having different reasons to buy and sell. That is why Mark Douglas talks about it, having to be mechanical. And he talks about the mechanical stage having to be gone through first. It's repeated experiences, as James Clear says as well. So it's not a function of intellect, it's a function of repeated doing and experience, and then getting feedback from that experience and persevering through what might initially be perceived as problems, when in fact, what you're actually doing is just experiencing a normal probabilistic environment. And we have to learn to differentiate between the two and not see problems as being wrong, but seeing them, the problems, as being normal, which just comes from this particular environment and how it operates. So we are having to become empathetic with that environment and understand the difference between a problem and normal. And the more we see it as a problem and being wrong, and not being normal and just being the normal operation of this probabilistic environment, is the more difficult it will be for us to attain the necessary mindset to operate in that environment. Degree to which you disagree with what I'm saying here is the degree to which your current beliefs are defending themselves. The degree to which you are not accepting that you should go through a process like this is the degree to which your current beliefs are defending themselves. And you need to have a real hard think about, if you're sitting here saying, I'm not going to do this, I don't need to do this, then just have a think about this parting thought I'm telling to you, and have a think about the stuff that I put to you at the beginning about James Clear and the working on beliefs and identity and who you are with respect to the environment in which you're operating. Is it your current beliefs, or which you might say is just my pride? Well, you wouldn't know. It's your pride or ego. If you start saying, I'm too busy to do this, it's too hard, you might even be addicted to randomness without knowing about it. We'll talk about that in the next session or the next couple of sessions. So if it's just too hard, so I'll just keep on doing what I currently do. Those are your current beliefs defending themselves. How do you know you should be doing something? Look at your results. How many times do you make what we're going to talk about in the next session, trading errors? And we'll define those very, very specifically. Parting thought. Right, homework. The doing the exercise is the name of the section in Trading in the Zone, chapter 11. It's just 2 pages, page 199 to 201 in the book, or 237 to 240 in the Kindle. And I want you to read those 2 pages at least 3 times, at least 3 times. Please do this. It's actually the last 2 pages of the book, 2 pages in a paragraph of the entire book, and I'm getting you to read it now. So please read this at least 3 times.